Hi, everyone. It's PJ Patterson here for a final market update for 2021. Today is December 23rd. Couple more sleeps till Christmas. And first of all, happy Christmas and happy holidays to everyone. I hope you have a wonderful holiday planned wherever you are, whatever you may be doing. Hopefully, you'll be spending some time with family and friends. Um, and also, thank you to all of you who've supported me throughout the entire year. We've had a fantastic year with a lot of stuff going on this year. It was a big year in markets, and it's not going to disappoint here into the final week or so of trading. Top three things today. I'm going to just pull back a little bit and cover off the GIP model, which is the growth inflation policy model, which is the overarching global macro lens through which we begin to filter or look at all the other stuff going on in the world. I just want to touch on a few things there. I'm going to touch on volatility, which has crept up a little bit here in the last couple of weeks, probably because of Omicron, but a few other things are going on politically in the US, and it's just perhaps it's just that time of year. But volatility also seems to spike a little bit when we have phase transitions or we're going from one quad to another. So I'll talk a little bit about that. And then finally, I'm going to talk specifically about the quads, quad 4 or shallow quad 4 versus quad 1 in the first quarter of next year. So from January of next year, which quad are we looking likely to be in? And then what happens next after that? So what's the quad that we're pivoting to? So this is going to be specific to the US, but I'll also see if I can touch on some Australian data as well. So let's start with, and today might be a slightly longer market update because it will be the last one for the year, and I am looking to give you some more deep dive into a few things to just set your expectations for what we're looking for, what I'm looking for in the new year, and also for some of you who may be new clients that have just joined in the last month or 2 or 3 months, the firm, and having me manage your money, just to understand a bit about the full cycle investment process, and particularly when we go through these phase transitions, what that can mean for a portfolio. So first thing I want to just touch on is this slide here, and I'll see if I can just make this a little bigger. But this is a recap of the last couple of years worth of quads in the United States. And what you see on this table, there's a little bit of busyness on it, but what I want you to focus on mainly is these conditional probability numbers here. And what you see here is this final quarter of 2021, and then the first, second, and third quarter of 2022. Now, these are estimates, but the numbers that are used to drive the probability outcome or the conditional probability of a quad are things like the base effect. So there's a 2-year look back to see what was GDP at 2 years ago in this quarter, 1 year ago in this quarter, that sort of thing. And then also there's a whole bunch of other data metrics that are looked at in real time, but also that are compared to previous data points. And what happens is you end up with a conditional probability. All that to say, there's a lot of complicated math behind it, I suppose, but all that to say that we end up with probabilities of a certain quad occurring. And that's what I want to focus on right here. So let's just quickly look at the first quarter of next year to see that we have really two overarching quad possibilities. The strongest one is a quad 4. And again, and I'll show you another table here in a second, or chart in a second, which I have shown before, but just to refresh, it's over 50% chance that we will land in quad 4. Now, that, of course, is not 80 or 90 or 100%, but it's still quite a large conditional probability that we could be in quad 4. The other one that has the highest sort of conditional probability is quad 1. Now, I just want to see if it's on the next, somewhere it's in here. Let me just find what I'm looking for. It is that table right there. Okay. So we'll come back to that one in a second, but I just wanted to show you, this is the actual quad map, if you want to put it that way. And this is for, again, the United States. We have quads 1 and 4 are on the same side of the y-axis. And so what that means is that you have the inflation. So again, growth, inflation, and policy. There's some similarities, but the main thing that we have is inflation is decelerating in both quad 1 and quad 4, and we are observing that. I'm going to show you a table on the CRB index that indicates that. We've got a reasonably benign or sort of neutral policy from the Federal Reserve or from the central bank. Now this is kind of interesting, but and I'll touch on this in a moment. But we certainly have had interest rates demonstrating that they are coming down. They're falling, and commensurately bond prices are rising. So again, we have monetary. So this is monetary policy. It's neutral in quad 1, which is fantastic. That's why this is the Goldilocks quad. And in quad 4, the Fed is very dovish. So they're actually cutting rates in a quad 4 scenario. And then you're sort of in a deflationary environment, really, at the end of the day, in quad 4. But you can also experience some deflation in quad 1. Again, it's not as severe as it is in a quad 4 scenario, but it certainly can be prevalent. And that's, again, where I'm going to show you a chart in a minute on the CRB index. We are seeing already deflation in things like oil. The oil price is coming down in all the commodity complex. It's their fault. Commodity prices are falling, et cetera. So we are seeing some deflation. So I just wanted to hit on that real quick before I go back, or as I go back to this other table. And oh, actually, no, sorry. Flipping around a lot. Hope you don't get dizzy. I do want to point out here that the first quarter, which you can't quite see here, but that's the box right there, is straddling the x-axis. And what that means is, again, this is why I've been using the terminology recently of a shallow quad 4, or even I suppose you could say a shallow quad 1. But we're right on that line, and that means that we're going to have some days, and we've had them in the past week or 10 days, where it's been sort of a quad 4 day where the market is anticipating that. And then we've had some great rebounds where you could argue that that's a kind of a quad 1 day. But of course, what we're looking for is what's the trend going to be? Because that's how you make money, is by effectively getting your portfolio set up and then sticking with a certain asset allocation and ensuring that you try to capture as much of that as possible. But the other question, and again, I will touch on this as well as we go along here, the other question is, what asset classes, what sectors, what style factors do we need to have on in the portfolio to effectively be able to straddle this and take advantage of the fact that we're not clearly in one camp, clearly in a quad. And hopefully what we will see as the economic data continues to get reported and we get through Christmas season, and maybe there's some good drivers. I mean, the economy is still growing in the U.S. There's no doubt about that. Inflation is coming off a little bit, and the Fed has indicated that they're going to have 3 rate increases next year. So when they start doing that will be quite interesting, to say the least. So and I'll probably have something to say about that as well. But anyway, this is the growth inflation policy model, 3 metrics, and they put us in a quad. And from the quad, we start to delve more deeply. And again, I'll touch on this as we go along, into what is the playbook, effectively. What's the playbook that we want to have on? So before I go and actually, if you want to know what the playbook looks like, that's the playbook right there. I have this thing printed off. It's not much better in print. I do need a magnifying glass to actually look at this thing. But one of the things I'll be studying over the course of the next few days, and probably over my break, is where can we find, and it's worth pointing out here on this table, for example, here, if we have a quad 1 scenario, or even a shallow quad 1, if you want to look at that, versus a shallow quad 4, where are we best positioned to straddle that line? What asset classes are the ones that are the best to own for that type of setup? And so what I'm going to be really looking at strongly is, because oftentimes as you're going through a quarter, you're not necessarily 100% sure what quad you're in. There's a lot of signals and a lot of evidence that gets presented, but you enter a particular period like this where you're just on the line. It's a little bit harder to discern. And so what you end up wanting to look for, what I will end up wanting to look for, are the opportunities where I can benefit from an asset class that does well in both quads. And again, I'm going to talk about that as well. Just before I get to all of that, though, I thought it would be worth discussing volatility. We have had a lot of volatility in the market in the S&P 500, in the Nasdaq, in the oil complex, in the Russell, and I talk a lot about this implied and realized volatility table because this table and the information that's contained on it is one of the lenses through which I make investing decisions. And again, just to refresh what this means, when we see implied volatility premiums, it means the market is probably having a bit of a panic attack. People are buying protection, and it's usually because there's a sell-off going on. And if you are in, for example, as we have been, quad two for a number of quarters throughout the course of 2021. When we got implied volatility premiums, we were typically having some sort of market correction. It was, the Delta variant, if you remember, for those of you who have been around since sort of September, October, and listening to these since then, you recall we had the Delta variant. Everybody panicked and started puking positions. The energy complex got slapped around pretty hard, but I used that as a buying opportunity as an example because energy is something you definitely want to own in quad two. So, and in quad three, actually, which we were in for a brief period of time there in the third quarter of this year. But this is one of those lenses that I use one of the tools I should say I use to help effectively get the timing a bit right in terms of selling, feeding the ducks. You've heard that phrase before, or adding to positions, or possibly just ejecting the whole position from the portfolio entirely. So this is a table from the, let's see if I have a date on here that I can quickly look at. Yeah, the 21st of December, so a couple of days ago. And I just want to go to the implied vol information here. This is from the 22nd, the following day. And what you can see here is we've gone from massive premiums, well, not massive, but premiums, pretty much all green here in a lot of the ETFs that are the macro ETFs that I use to put into portfolios, to lots of discounts, which means the market. And so, sorry, I didn't explain what a discount is. So a discount is where the market has become complacent and people are not buying protection. This is puts and calls and things like that. And generally the market is having a nice run up. And again, this is another, lens that I use to time some selling decisions, or as in the case of a premium, buying decisions to either add to positions or to take some profit in positions. And so this is one day. This is very odd, not odd, but it's unusual that you will get that massive amount of swing in one day. And what it signals really, when you pull back from all of this, what it ultimately signals is the market's trying to figure out what the next quad is going to be. But there are some underlying or I should say overarching themes that I am present to. Again, I've talked about a couple of them, and that's the fact that inflation has begun to fall, which means we're in quad. That's a quad one characteristic, but it's also a quad four characteristic, and we see that interest rates are falling. Now, this is a quad four characteristic probably more than anything, but it could also be a quad one characteristic where interest rate policy is typically set to neutral, as opposed to a hawkish type policy. So anyway, I'm just explaining all of this because, again, we're in a phase transition right now, and because the next quarter is straddling that quad map line, that axis where it could be shallow quad four, it could be shallow quad one. I'm just, I guess, elaborating on some of the things that I'm watching, and you can too, for that matter, if you follow along at home, to see, to understand what investment decisions are being made. So anyway, that's worth pointing out. Now, we have had some, again, volatility spikes that have put us into the chop bucket. So you probably heard me discuss this before as well throughout the year. We have situations that occur with volatility that are episodic and non-trending. So you just get, for something happens in the market, everybody panics and pukes their positions, volatility spikes. But as professional investors, I don't worry about that, or we don't worry about that, because we use that as the opportunity to buy into positions that we now get on sale, that are the positions that you want to have on for that particular quad. So it's a real important thing to understand volatility, and particularly the episodic and non-trending. What we need to be careful of is when volatility becomes a trending volatility, and particularly when the trend changes. So volatility has been bearish, so it's been falling ever since we had the COVID crisis that kicked off, back in early 2020. We had a lot of vol. It was elevated, and it was elevated for a long time. We were in the uninvestable bucket, which is 30 vol on the S&P 500 plus, on the VIX, on the VIX-N, which is the NASDAQ. That's probably, again, similar, 30, 31 plus, and other indices as well have slightly different metrics, but they were all in that uninvestable bucket, which is why we stayed well clear of them, and we hid out in things like treasuries, and other manner of fixed income securities, and US dollar and gold, and the such like. But throughout the course of 2021, we were in quad 2 pretty much all year, except for, again, that quad 3 spat that we had in the third quarter. And quad 2 is and I'll just go back to this. Let's see if that's the one I want. Probably not. There is another. There it is. Quad 2 is that quad here, the reflation quad, where pretty much equities is where you want to be, and commodities in particular, but equities is the place to be. That's where you make an absolute killing ton of money. And we did that this year. We had great performance through that period of time. We then dipped into quad 3, as I mentioned, and there's still some things that you want to own over that are crossover assets, energy being the big one in quad 3 that does really well, and commodities too, broadly, because that's more of a stagflationary environment where we continue to have the inflation part of the trade, but there's other issues that are popping up with interest rates and things like that. Anyway, I'm not going to go into all of that. So that's a bit on volatility. Now, I've kind of been talking about the item number 3, which was the quad 4, shallow versus quad 1. And I'm going to go back to, let me just find it real quick. I think it was, sorry guys, again, so many slides, so much information to get. There we go. I want to go back to this conditional probability table here. And as you can see, when we get to the second quarter of 2022, there's a 93, let's call it 94% chance conditional probability of quad 4. It's going to happen in Q2 of 2022. This is in the US. And so again, if we end up being in a shallow quad 4 in the first quarter of 2022, I will have on, or I will be putting on, I'll probably be putting them on in the next, over the course of the next couple of weeks, in spite of the fact that I will be on holiday. When the markets are open, I'm paying attention, and I will be watching, but I'll certainly be looking for opportunities to put on a more quad 4 focused portfolio if the opportunity presents. So as an example, just quickly on that, if I get the opportunity to buy gold a little bit cheaper than where it is right now, so gold, I'll be buying some gold. Treasuries across the curve, I'll be looking to buy. So everything from 7 to 10s to the 20s, and even the longer term 30-year stuff. But again, using ETFs to do all of this. But again, buying the quad 4 more defensive type assets, because when you're in a quad 4 scenario, you need to be protecting capital. It's a difficult market to make money in, certainly in equities. There are places in the equity complex you can make money in quad 4, utilities in particular being one of those. But things like small caps and growth stocks and all that stuff, they typically get completely hosed in that environment, and you just want to really focus on preserving the capital that you created, or made rather, during the quad 1 and quad 2 periods of the cycle. And that's why we call it full cycle investing. Funny about that. So let's move on now to a bit more on yield. So I did want to talk about, actually, I'm going to show you 2 quick charts. So I did say to you that I was going to just show you a table. Let's see here, not on that one. I think that's the wrong one. Here we go. The CRB. So I mentioned to you that inflation has begun to roll over, and that there are signals and signs out there that we have exited quad 2. This chart is one of those key things. So this one, and I've used this chart a lot over the last 6 to 8 months to 9 months in these videos, showing you the commodities chart, saying, look at this thing. It is in a rip-roaring bull market. from left to right, it just went, almost straight up. Not quite hockey stick stuff, but pretty strong trend. I think you'll agree. Started off somewhere around the 135, 140 level. Actually, no, sorry, 140 to 145 level back when the call was made in late 2020, sort of in that September, October timeframe, that inflation was coming, that Quad 2 was coming, and that we needed to get the portfolios set up for that. And then, of course, Bazinga, it just goes, from November, December of 2020 all through 2021. This chart rather, has just gone straight up. But look at that, right? It has rolled over. The trend has changed, and that big down draft, there's a couple of notations here. They're a little bit hard to see all of it, but this wiggle and then this drop was a clear sign that the commodity, that inflation was coming out of the system. And I would fully expect, as we again go through the full cycle and as we enter a potential quad 4 scenario or shallow quad 1, this chart is going to continue to roll over, and then it may have a dramatic fall if we go into a more sort of mid-range, or I don't think we'll go into a deep quad 4 per se, but a mid-range quad 4 scenario where you'll really see that come off. But that, again, this is one of those signs on the road that you have to pay attention to when you do this type of work, is what are various parts of the market telling you. Okay, what else do I want to cover off today for you? I think I touched on a number of things that are importante. And oh, yes, of course. Let me get to, sorry, there is a table that I want to get to, and it is this one right here. So this one is super busy, but I want to point out a couple of things. This is a longer term, well, it's a look back, but it's a couple of quarters ahead on what's happening with the quad. So I just wanted to touch on Australia real quick, because not every country does what the U.S. is doing. In fact, sometimes you can have the U.S. in a certain quad and other parts of the world in other quads. A great example of that right now is China. China has been in a quad 3 situation for the last couple of quarters, I do believe. Let's just have a look here at China. Yep, so China has been in quad 3 this quarter. It's looking like, and quad 4 and 3 prior to that. So looking likely to stick around sort of in a quad 3 scenario. Mind you, that could change. So again, whilst these are predictive, at this point it's based on data. And China is now has turned more into a bull market scenario. And again, we can see by the middle part of next year, China's back into quad 2. So anyway, my point is to say that if you look down here, you see that the U.S. is in, again, potentially shallow quad 4 or shallow quad 1 in the first quarter, but then definitely in quad 4 in Q2. There are other countries, mind you, that are not in those quads. But Australia in particular, we're in quad 3 right now. So we're having an inflationary environment, and you can see that in oil, you can see that in housing in particular. That's gone crazy, and just the cost of stuff. We're definitely in an inflationary environment in Australia. We're probably going to see that perpetuate in the first quarter of next year in that stagflation type environment. We're also going to have to see what the RBA does. I think they've indicated they're slowing some bond purchases, and they'll probably, I suspect, raise interest rates. Now, the bond market here, and the bond markets everywhere, just so you know, and I've said this before this year, but the bond markets everywhere set interest rates. The Fed, the Federal Reserve, the reserve banks of whatever XYZ country do not set interest rates. The bond market does. The bond market is a $100 trillion. I mean, I don't know if it's 100 trillion, but it's one of the largest markets in the world, second only to currency markets. So the most liquid market in the world is currencies. The second most liquid and broad and deep market is the debt markets or the bond markets. And then the third would be equities, of course. But in any case, what the bond market's been signaling is that rates are going to, at least in the U.S., it had been signaling rate rises, and the Fed came out with their announcement, and then the bond market began to reprice that lower. So it didn't stick for very long. So the bond market is basically saying to the Fed, we don't believe you. Like, you might get 1 or 2 rate rises in, but that's going to be about it. And then we're going to run into quad 4 in Q2 of 2022. And guess what the Fed in the U.S. is going to have to do? They're going to have to start cutting rates. And that's exactly what they'll end up doing, which will set up the table for a quad 1 or maybe quad 2 scenario in the back half of 2022. But again, sorry, back to Australia. we should maybe see that the Fed, as that the Reserve Bank here, may try to pop rates a little bit. We have seen rates in Australia climb from, I think I was talking the early part of this year. I've just flipped back in my notebook to August 13th, when the 10-year in Australia was 1.2, the 5-year was 64 basis points, and the 2-year was 4 basis points. Fast forward to yesterday's close prices, and the 10-year was sitting at 1.62. The 5 was at 1.33, a little more than double where it was back in August. And the 2-year is at 34 basis points, and that's what, probably a couple 100% increase from 4 basis points. So we've had a pretty massive adjustment upwards in interest rates in Australia, which is, of course, why we've also seen the fixed rate money that was super cheap in the last year has begun to get repriced. And a lot of the banks now are repricing all of their variable and fixed interest rates because of the fact that the cost of money vis-a-vis the bond market is now higher. So if that continues to persist in Australia, again, I think what we're going to definitely continue to see is that stagflationary environment where, again, the cost of stuff, cost of living goes up. Everything we need to buy, like fuel and food, continues to go up. But other things like wages and stuff are stagnant, and we just have that stagflationary, and growth is sort of stagnant. And that's one of the issues in Australia right now, is we need to just kickstart and get our growth firing again. Now, hopefully, China is going to be a part of that story, because, again, China is going to be in Quad 2 later this year. And of course, look at that. Australia will hopefully come out of this and jump into a Quad 1 scenario. So again, I just wanted to point out that not all countries are in the same quad at the same time. And that's probably an important distinction to understand, because it does drive where I allocate capital, how I allocate it, and so forth. So that is a little bit about where we're headed next year. And then finally, I just thought I would maybe touch on asset positioning. So again, one of the key things, and maybe I'll go back to this table here. One of the key things that we look at that I look at is, where do we need to pivot to in order to preserve our capital and hopefully grow it. And again, the best quads to make money in are quads 1 and 2. Beyond the shadow of a doubt, those are the two quads where you absolutely kill it. And those are the two quads where people think they're investing geniuses and all this other nonsense. And you see the rise of the Robin Hoodie accounts and all this other stuff. People think it's easy playing this game, and they just run out and do all manner of stupid things with their money. Not least of which, interestingly, of late, was people are just piling into the cryptocurrencies. And if we go into a Quad 4 scenario in the US, the cryptos are going to get slammed. So if you are a crypto investor, then and you have some crypto, then you may want to have a conversation with me. But what I will tell you is, based on back tests, is Bitcoin in particular, and all coins would be very similar. So Bitcoin is a good proxy for this. Let's just see if I can find it real quick on this table. Bitcoin in a Quad 4 scenario, back test to be down about 20%. So could you imagine, being down 20% from where you are today? Now, luckily, if we are in a Quad 1 scenario, Bitcoin loves that. So Bitcoin could be up, 60 or 70% in an environment like that. So anyway, you just have to be careful with that stuff. But again, if we're in a Quad 4 environment, and even if we end up in a sort of deep Quad 4 environment, you're going to be looking at the cryptos getting smacked around a little bit. So if you have had some profits in crypto in the last few months, which you should have, because cryptos love pretty much any other quad except Quad 4, I would book some of those and look to reallocate some capital to more safe haven type assets. But in any case, let's just have a look here at some of the things we want to own. Now, as I mentioned, some of the sectors, you can still make money in equities in a Quad 4 environment, which again, have to be invested in the right sectors. That's the whole point of full cycle investing. That's the whole point of me not giving you a balanced fund pie chart. Those of you who have had statements of advice delivered to you of late, you know that I rail on that stuff because it's so stupid that you would be given this pie chart and never adjust it. It boggles the mind that that's what the current establishment, they've done it for the last, I don't know, probably 50 years or so, at least 40. and modern portfolio construction has nothing, in my book anyway, should have nothing to do with a pie chart. People are comfortable in that, and I get it, but the reality is that you've got to be nimble and you have to be able to readjust your portfolio through the full cycle. I've banged on about that enough. But anyway, let's have a look at the equity sectors that can do well in, and actually a shallow quad 4 as well as potentially a quad 1 scenario. So again, one of the things I'll be looking at, and also sometimes it's what you don't own as well as what you own that makes all the difference. Anyway, I'll be looking at buying some consumer staples. So I've pivoted out of consumer discretionary. I sold a lot of that stuff in the last week or so. So consumer discretionary is off the table now. Probably looking to pivot into consumer staples. If you don't know the difference, I'm not going to talk about that right now, but you can Google that and get a great primer on any sort of website, Investopedia, whatever, on the difference between discretionary and staples. Should be obvious. Probably looking to buy some utilities as well. And the thing that I should mention quickly, and I've probably said this before, but I'll just say it again, everything goes up in quad 1. So even though on this particular table it says the worst equity sectors are blah, everything will typically go up in a quad 1 scenario because, again, it's Goldilocks. But some things are going to perform a bit better in a quad 1. And again, if we have a higher conditional probability that we're going to have a shallow quad 4, I can still own equities, but there's certain equity factor or equity sectors rather that I actually want to own. And then there's also some style factors like having low beta stocks, higher dividend stocks, as you can see here, owning some quality defensive stuff and the such like. You also want to own more fixed income, gold, and the US dollar likes quad 4 as well. So that is from the quad that we're going to in this next quarter. I'm still working on sort of understanding exactly where to be positioned. I'm taking a lot of guidance, obviously, from an institutional client of Hedgeye, taking a lot of guidance from them as well to get that right. And I've gone to, I've been generating quite a bit of cash at the moment. Cash is a position. Just for those of you who have an idea in your head that you have to be fully invested, well, guess what? Cash is a position. And so cash, it can be Aussie dollars, it could be US dollars, etc. But it is a powerful position to be in because, of course, cash, whilst you don't get some massive yield on it, you also can't lose your money. So, and again, that's something that I've really railed on this year is preserving and protecting capital and understanding where you are in the cycle. And so right now, again, just to recap and wrap up, let's see how many minutes am I at here. 32. I knew it was going to be about that long. So thank you for sticking with me, by the way. And of course, you could have watched this in chunks. But just to sort of wrap up, one of the key things that I'm going to be looking at next year is protecting the fantastic gains that we had this year. So if you were invested with me throughout the full cycle of this year, the full year of this year, we've clocked some wonderful performance, and I want to make sure that we don't have any sort of drawdown on that and that we're positioned correctly. And when I say we, I really do mean we, because I invest my super money and some other family assets exactly the same way that you do, and that I do for you, I should say. And so that's very important to me to protect and preserve my own capital in my PA and in my family's wealth, and to ensure that we are constantly growing that. So anyway, I think I was just saying that to wrap up, that's the puzzle that I'm going to be working on. Hopefully with a couple of nice adult bevies and maybe a bunch of Christmas chocolate to and all those wonderful snacks that you get to eat and not feel guilty about it during Christmas. Anyway, I think I've probably rambled on enough in this update. But again, it is the last one for this year. I mean, unless something remarkable happens in the next week where I need to come on and say something. But I suspect if that happened, it might be a 2 to 5 minute max video. And when I get back in the new year, that's when I'll do a position update, because that is likely where we'll have the portfolio on that we'll likely be sticking with for at least the better part of the first quarter. So everyone, thank you again so much for a wonderful year. I am blessed to have some of the best people on the planet as my clients. That's all of you, and I really do appreciate feedback that you give me, but also the support and the encouragement and the gratitude as well about the information, the depth and breadth of which I go into this stuff. I know not all of you say things to me, but those of you that do, the feedback's always good, and I think that I'm on a journey of learning, and I'm passing on to all of you everything I know, plus all the things that I'm learning. We're doing this together real time. It's a lot of fun. And as you can tell, I love doing it. So thank you again for a wonderful year. That's a close and a wrap for me on 2021, powering into 2022. I'm looking forward to it. I'm looking forward to making all of you more money in 2022 as well. So Merry Christmas, Happy New Year, and I will see you all in 2022. Cheers, everyone. Bye.